Welcome to the Ramp Up to Your Retirement podcast with your host, Dan Reese. Dan, good to be with you. It's nice to see you again. I haven't seen you in a while, honestly.
Yeah, time flies, doesn't it? I mean, these late summer months that we just went through, the calendar gets filled up pretty quickly, especially here in Michigan.
Oh, yeah. Well, it gets filled up with vacations here in New Jersey. So it's like, yeah, okay, we're just going to kick back and relax. And nobody is around. Honestly, quite truthfully, nobody is around. So today we're going to talk about questions that clients and prospects should ask of people like you. So this will be interesting to hear from your perspective as a financial advisor, what you think people ought to be asking you about.
Yeah, and I mean, I think it's really a good topic, and part of it is because, you look at all the data out there, how many people are afraid to go talk to a financial planner or a retirement planning expert because, I think a lot of it is like, I don't even know what to say. And, and they don't know really what to do. And so part of the reason we want to talk about it is to get people more comfortable understanding, look, This isn't rocket science. It's about relationships still, and it's about making sure you're finding somebody that's qualified, right, to give you good advice. Because these things, you don't really you can't take things back. You make a lot of these decisions going into retirement. They're made, right? It's like you give up your job you've had for 35 years. You can't just go take it back if it doesn't work out well. So really important topic.
It is a really important topic. So where do we start? I mean, you're right. There are a lot of people who, for whatever reason, don't want to go in and sit down with a financial advisor. I think some of them are intimidated by the whole prospect of talking to somebody else about their finances and discovering they've made mistakes or something. Yeah. But there's a myriad of reasons. So where do you think clients and prospects should start the conversation with you?
Yeah, I think a lot of it is just getting educated up front before you even make that initial call as to the types of advisors out there, right?
Okay.
Because I think a lot of people do worry about being sold something. It's like, hey, they're just there to make a buck, and they might put me in something that's good for them, but not good for me. And that would be obviously the worst scenario. So I think a good place to start is maybe understand a little bit about what are different types of advisors that exist out there. Things like what's a fiduciary and what's someone that's under the suitability standard, ththings like that.
What is a fiduciary and what makes them different from any other type of financial advisor?
Yeah, I mean, start out with fiduciary is just a title, right? You still got to act that way. But generally speaking, So like generally speaking, though, a fiduciary is going to work under a registered investment advisory firm. RIA is a short term that you may hear out there in the world. Mm-hmm. And also certified financial planners are also fiduciaries. They take an oath as a CFP to work under the fiduciary standard. So generally speaking, if you can find a CFP or you can find someone that works under an RIA, they have that initial obligation to work as a fiduciary for you as a client. If somebody doesn't operate under those two, they may be operating under what's called the suitability standard, which doesn't mean that's a bad thing. I want to just kind of emphasize that people are like, oh, you're not a fiduciary. There's some great people that work under different standards, but it's a really good thing to understand as you start, looking into people to work with.
Clarify something for me. What is the fiduciary standard? What is it that obligates someone as a fiduciary what is that standard they're operating under?
Really, the main three things we think about and we talk to clients about is number one, due diligence in your specific situation, right? So like, let's say, Bill, as your example, first things first, anything we offer to a client, we need to do due diligence on. Like we need to understand, are these good options for clients from an investment perspective, right? Are these tried and true? Have they been around? Do they have the managers have good reputations? Do they perform like they should? But then secondly, how does that apply to the client? Everyone's unique. And so just because something is a really good investment doesn't mean it's good for you. Does that kind of make sense?
Yeah, no, I understand. So you're tailoring your advice to my concerns and my preferences, as it were.
Yep, and that's kind of pillar one. And the second thing we think about with it are taxes. When you start thinking about everything you do with money, especially around investments, taxes there's going to be an impact on your taxes. And so understanding that, because one of the things, let's get back to the root of what a fiduciary is, working for you. for
Yeah.
your
Okay.
best interest, to put you in the best position long term, right? Not the opposite, not for the advisor's best interest, but for your best interest.
So you're not going to be selling me something to make a commission off of it. You're tailoring that advice in a selfless way, as it were.
Yes. And so, like, when you think about number one, we talked about investments and making sure they fit you. Number one,
Yep.
they're good investments. Number two, they fit you. Second piece, taxes, right? So when you think about it, we want to make sure, hey, let's give you a simple example. Let's say you had a brokerage account you've had for years. So when I say brokerage account, not an IRA. So it's a non-IRA account. So you're kind of getting taxed as you go along for dividends and interest and capital gains and things like that. Someone might be like, well, we want to get you in this portfolio over here. We're just going to switch everything, right? But wait, what if there's a bunch of unrealized tax gains and all these things, and all of a sudden you've got this big tax issue because the person didn't act in a fiduciary manner, right? To make sure those things were addressed and you understood if you were going to make that change, this is the repercussions of that change. So fiduciary is helping you understand that, making sure that you're going to make a good decision, because really this is about a partnership anyway. So that's a big piece, tax. And then the third thing's conflicts of interest, right? So like everybody's like, oh, I have no conflicts of interest. That's pretty hard in the world today, right? I mean, inherently, if you're getting paid to do something for someone, there could be some conflict there, right? And so really disclosing what those are and what effect they have on that relationship, right? So those are kind of what we consider the three kind of key pillars around being a fiduciary for clients.
Well, I don't know if this fits under the tailored to me thing, but where does like risk tolerance, where do those kinds of things come in?
That's a great question. And honestly, when you start thinking about that piece of it, that's where it's about getting to know one another, right? So like really, if I'm going to act as a fiduciary on your behalf, Bill, I mean, I got to know you. Like I have to know, like, what's your personality? How are you affected by swings in the market? What are your needs? What are your primary goals? I mean, is it, hey, Dan, I'm going to need all this money to live on, or is it maybe, hey, some of this is going to be for my kids or for charities? And so like what really understanding what your needs are before we start talking about what investments fit for what your goals and needs are.
Yeah.
But you can't do that if you don't get to know somebody, right? And I think that's a good question that comes up. We can talk a little bit about is what is that interaction with this advisor that when you first meet them, right? What's that conversation look like?
Yeah. Well, I have a personal financial advisor. I will admit that I resisted this notion for a long, long time. It was difficult to get me in the door. Once I was in the door, I was fine though. Dan, that's what's funny about that,
Yeah.
So I was looking for a connection, just fun. I don't even know what it means. I was looking for a connection with that advisor in some kind of way. And I wanted to feel like there was transparency in the relationship.
Yeah. And I think that's a great point. So we always talk to people when you're going and we recommend, hey, if you're looking for an advisor, it should be a long-term relationship. You should be talking to some different people and getting a feel, right, for what those conversations are like. But here's kind of what I would say, when you go in, if the conversation turns very quickly to where you should put your money, that may be a warning sign, right? Because like, if you're developing long-term strategies in your best interest, there's some digging that has to be done, right? There's some conversations that take some time. If someone comes in and they're like, hey, you should just, put this in this fund, or you should put it in this annuity, or you should do whatever, really quickly, that to me should be a little bit of a warning sign, because they probably haven't taken the time to get to know you as well as they should have before they started talking about recommendations.
Interesting. Okay. All right. That is good to know, actually, as a matter of fact. Anything else in that communication process and that relationship that's fundamental we should know about?
Yeah, I think, there's two key things. Number one, when you start meeting advisors, number one is making sure they are really taking the time to get to know you. And you can judge that a little bit by the questions they ask, right? And some questions might be a little uncomfortable because, if they want to do a good job for you, they need to know kind of what you're about and where your values lie and things. And a lot of us have never talked about that stuff, right? We've never really had those deep conversations, right?
Exactly. Yeah.
And so value conversations can put people a little bit on, can be uneasy, but understand, like, if you should feel comfortable. So if they're really pushing you, that might not be good. But if they're kind of being inquisitive and trying to get you to open up in a friendly manner, I think that's really what a good advisor should be doing on that side of it. The second piece of it, really, I always think about is, how do they work? What process do they use? Because the thing about, like, investment management, financial planning, retirement planning, tax planning, estate planning, throw them all out there, they're complicated, right? There's a lot that goes into it, and they all interact. And so you can't kind of like address one of those areas without it affecting other parts of your planning. And so, like, if you really want to make sure as you talk to people that there's a way that they attack these things, right? There's a way that they work. And so I don't mean, like, we don't think about, hey, they're going to knock all this stuff out in 2 months. That's not a reality. Many of these things can take several months to really update and get where you want it. But what I always recommend is that there's a way that it's being attacked based on your own priorities, what's most important to you. And then also, it's not, don't bite off more than you can chew, right? That saying has a lot of, is really apropos in this area, because you can only do a few things at once, right? Prioritize, start knocking them out one thing at a time, but just know that there's a way that, they're not just going to get your account, start managing them, and forget about all that other stuff that was really important to you, to work through.
Yeah. What about that process is important, though? I mean, I kind of sitting here thinking, I don't know that I understand what you mean. I mean, I sort of intuitively understand it, but can you expand on that a little bit?
Yeah, I mean, I think typically, and here's the thing, is that when you start talking to an advisor, you don't want to go sit in that office for 3 hours at once, right?
Oh, Lord, no.
You know what I mean? That's probably not going to be very valuable. What you want is, you want to say, okay, let's start off as an example. Let's say we have 5 kind of different meetings over a few weeks, and we don't want to have anything longer than about an hour, because that's about the most that any of us can handle, right? Before our attention goes off into la land, right? And so, like, understanding, like, hey, can the advisor lay out for you how you're going to use this time in each of these meetings? For example, like, really getting to know you, kind of what we would call discovery and visioning, like looking at, what do you really care about? What's most important to you? How do you feel about risk? What's your family look like? Do you have charities that are really important to you? There's all these different areas. How do you like spending your time, right? And then the next meeting might be like what we would call a document deep dive. We've got all this stuff now. We're getting to know you, and that doesn't ever end as we get to know you. But the thing is, then we got to go through all this stuff. What do your current investments look like? What's your estate plan look like?
Exactly. Yeah.
Yeah. What do your taxes look like? Right. But as you go through these different meetings, it's kind of one thing at a time, right? So a document deep dive gives, like, you as a client the opportunity to explain what this stuff is. Not go through every detail of it, right, but be like, hey, that's what this is. That's where it came from. This is my taxes, whatever, like, kind of walking through those areas. So then you can get into starting to develop, like, an analysis and start getting into some primary recommendations, right? But it's very structured when I talk about process, so that as a client, you feel like it's not going too fast, meaning that you understand what's happening, but also you're accomplishing things, right? Because a lot of this stuff is like, you want to have that buy-in where you're like, man, this is great. I've been putting this off forever, and now I can see that this stuff's starting to come together, and it makes you feel good, right? And that's ultimately what a good process does for clients and the advisor both, is it allows you to get things done in a very kind of a tempoed way, meaning it's not too fast, not too slow, right? And at the end of the day, it makes everybody feel good. Like, hey, we're really making progress, and I feel better about my money.
How do you get paid, Dan? I mean, do you bring it up when you talk about how you're compensated, or do you wait for the clients or prospects to ask you? How does it work on your end?
Yeah, I think that's great. And that should be on an agenda. And by the way, we didn't really mention that, but most of the time when you go in for a meeting, it is a good practice that, there's an agenda there. So you make sure you back to that process. What are we doing today? Let's make sure we're addressing those things. And what you just said, let's make sure we don't miss anything. How about fees? Like, people care about, hey, how much is it going to cost me? Right?
Exactly. Yeah.
Pretty important thing. And yeah, so typically a lot of fiduciaries get paid on what's called a fee basis, which typically is an assets under management model, meaning they
Mm,
get paid, some percentage of the money they're managing for you. And a lot of them, that's how they pay for the planning too. It's kind of an all-encompassing fee.
yeah.
And so, which typically, is around 1%. It depends if you look at most of the numbers for the advisor cost. And we're not going to get into all the details, investments, and all these other things, just to give you kind of a high level.
No, 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 yeah, we don't need to delve way down into the details. Just a good overview is enough.
Yep, and that's kind of a normal amount, and you can get a lot different services. Like just because somebody charges X or Y doesn't mean that always the services relate to that. Sometimes they charge more and don't provide as much service. So really understanding what the cost is, how it's billed. So typically, if you're an asset under management fee, the most common is probably quarterly. Every 3 months they
Yeah.
charge you, for a quarter of the year, and so on, and it goes on to perpetuity as long as the relationship is still there. But understanding how that's charged, what that looks like, and then what services are you getting for that? Are you getting full financial planning, or is financial planning an additional fee? Is it just for
Oh,
investment management? We actually have a particular form that actually it's called the financial planning form, and it says right on it, are you getting charged separately for this financial planning, or is it part of your advisory fee, right? And
yeah.
so that's really important for everyone to understand, and that to be disclosed, because the financial planning is really what a lot of people are looking for. The investment management is really important. Don't get me wrong, but the financial planning is where people oftentimes feel like they're making progress and they're
Right.
knocking things out, and it makes them feel better about their money.
So some advisors will charge you a separate fee for that?
Yeah, there's a lot of different models out there. Some charge just for investments, and they'll charge even like a monthly retainer. We've seen that, right? Where it's
Okay.
like, hey, we're going to charge you a monthly fee for, let's just say, for financial planning, and then we charge you some lower percent for investment management. You're starting to see a lot of different ways that people do that. But the biggest thing is understanding what is the total cost when you put it all together, and what benefit you're getting, and what services you're getting for those things, right? Now, remember, as a fiduciary too, there are some guidelines, right, around what's fair. You know what I mean? Like if the SEC comes in and does an audit on an advisor, they're going to say, hey, what are you doing for this client for this amount of money, right? So there's got to be some relationship there that makes sure that, again, it's working in your best interest, and it's a fair amount that's being charged.
What else do you think is important that prospective clients or existing clients should know or be concerned about, Dan?
Yeah, I think another really good thing to understand is once you get through that initial, we would call the initial planning process to kind of get you on
Yeah.
the right track, what happens now? Do you ever talk to me again? Right? You ever gonna call me? You ever gonna like,
I got in the door once, Dan. I'm not going to talk to you anymore. Okay.
yeah,
No, but I know my financial advisor will bother me like every quarter and say, Bill, it's time for you and your wife to come in and have a conversation. And I'm like, I'm fine. And he's like, well, you probably do. So you should come in and sit down and talk. So
yeah.
it's a fair point, Dan.
Because the thing is like your life changes. So what, a couple of things. What's the process moving forward?
Right.
Like what type of review schedule are we going to be on? Like, are we going to talk about taxes? What are we going to do with ongoing planning, right?
Yeah.
What's that going to look like? And then what other communications exist? Are you keeping me up to date with what's happening in the world with some type of weekly email? What's going on with markets? What's going on with different planning ideas? That's one of the great things about email. There's really no excuse to not be regularly sending out good information to your clients so that they're able to see what's happening in the world. And then, additionally with things like, hey, do you have any other learning opportunities? Are there webinars that I could attend as a client, or in-person events? Or, how do you continue to educate me to make sure that I kind of know what's going on? Because I think we've talked about this before, but it's the old saying is like the biggest challenge in the world is the things that you don't know. Like I always like to
Yeah.
say,
Oh, yeah.
you know what I mean?
I
The stuff
do.
you don't know is like, hey, I know I don't know that. I need help with that, right?
I don't know how to build a plane. I don't know how to build a car, but I'll get in both of them.
Yeah. Yes, right. And so that's the whole point is like, what's that ongoing thing, kind of like service model, if you will? What does that look like? Because this should be, ideally when you find that right fit, like you want it to be a long-term relationship. You don't want to have to go through and be like, oh, that didn't work, right? Because these decisions are way too important to just wing it. You want to make sure they're going to work over time. So like that ongoing service model is super important.
I completely, utterly agree. Let me ask you something though. If it doesn't work, Dan, if you don't think things are working, how do you fix them, or can they be fixed, or is it sometimes better that client and advisor part ways? I realize that kind of can be an awkward sort of question to ask, but love your thoughts on it.
Yeah, I think that's a great question because number one, I think we quit on relationships too easily. Oh, that's not, that's why divorce rates are high, everything else, whatever. Yeah. But so I do think conversations are always good if things aren't going the way that you want them to. Like, hey, how, what is it that you're not comfortable with? Are there things that we could do differently? There could definitely be a time where it's like, look, this might not work. And I'll give you a simple example. Like,
sure,
I personally have done tons of research on market timing. I don't think market timing works. I think most educated people that have done a lot of research understand markets are way too crazy to try to know when to get in, when to get out, and try to make money that way, right? So like, if, for example, somebody, that's what they wanted, number one, we'd talk about that up front through that initial process. But let's say that conversation had not, you hadn't had that conversation. Now, all of a sudden, markets are getting a little crazy and they're like, wasn't it time to get out? So all of a sudden you have this philosophical disagreement, right, about how to manage money. And so if you run into like philosophical differences on planning and things like that, that's probably going to be pretty tough to overcome, right? Because it's kind of like, you just feel differently at a very deep level, of how to do something, right? And so the good thing, if you are working in an assets under management like model or agreement, typically most of the time it's pretty easy to move on, right? You can just kind of like you change advisors, you remove your advisor from your account, and then there's no more billing, and then you can do whatever you want, with those funds and things. But kind of get back to your point. So the change shouldn't be hard. That's one thing where you have to be careful if you're getting into products where you're like kind of stuck in them. Like certain annuities might be 10 years or this or that. You have to really be careful because you have to know that definitely fits in my plan. So I'm fine making, setting that money in that bucket where I don't have to worry so much about it. But you just have to be aware of that and careful of that so that as you're making those decisions with your advisor on investments, that you do put yourself in a good situation where if, it did go south, you could leave without too many problems around that.
Fair point. And it does happen.
Yeah.
It does happen. And it's why so many financial advisors put so much emphasis on those initial meetings. You're not obligated. You walk in to talk to Dan. It's a conversation. It's an evaluation. It's a suss it out, get a feel of it kind of thing, right, Dan? It's like just because you walked in the door doesn't mean, okay, now I'm committed to Dan.
Oh, I mean, honestly, the truth is like a good advisor is going to be interviewing you as much as you're interviewing them.
Yeah.
Because, the thing is, it takes a lot to bring a client on if you're doing it the right way. It's a lot of effort. There's a lot of man hours, women hours in the office, like going through and helping go through that process.
Yeah.
And so we want to make sure that it's a good fit too. Just like you as a client want to make sure it's a good fit. And so, I think that's good to understand. And that really goes back to what I was saying originally. When you walk in, you're going to know that pretty quickly. You know what I mean? You're going to know if this person's really trying to get to know you, really understanding what you're looking for, or if they're kind of trying to pivot right away. Well, let's get this going. It's like, that's not how, like I always say, like, did you ever date somebody you went out once and they're like, let's get married. And you're like, whoa,
wait. Yeah, not generally a pretty good idea, not generally a good idea, but rarely and occasionally it does work out. But most of the time it's like, we need to change this relationship.
Yeah. And it does help, by the way, like you still need to be careful. Like if you've got, like if one of your good friends has referred you to an advisor, you still need to do your homework. You
Yeah.
could do things like broker check. Like you can go online and check to see, what kind of history the advisor has. If they're CFP, which is a great thing, highly recommend working with CFPs, certified financial planners. You can go to their website and you can check the CFP website to say, hey, does this advisor have any issues, right? But referrals can be good in a way that if it's someone, you have a trusted relationship with a friend or family member, and they have a long-term relationship with that person, and they've done really well by them, that's always a positive, right? That's always a positive. But still do your homework,
I agree. And I'm not going to undercut that. I think you really should do your homework. But I do think at the same time, if you know people, to shift it to you, if I know people that have been working with you for a long time and are happy, it's a good indication that at least I know you're trustworthy. I may walk in the door and know, gee, Dan's trustworthy and all this other stuff, and then start talking about it's really important for me that you do, market timing on my investments. And then it all goes downhill from there. But yeah, no. I think referrals can be excellent because gives you a good indication of somebody who's earned other folks' trust. And speaking of which, if people want to get a hold of you, Dan, to have a conversation with you to see if, you can earn their trust and maybe if there's a fit, what's the best way for them to get a hold of you?
Yeah, I mean, honestly, the easiest thing is just go out to our website, averywealth.com. And what I would tell you is that we've worked hard to get a lot of really good resources out there. And one of them we're going to put in the show notes, which I think is a great little guide. It's called the Family Finances Guide, right? It's a little, 16, 20 pages, and kind of walks through some of the things to start thinking about around financial planning and your money, right? But if you go to the website, you go to our Insights tab, we've got all kinds of great information where you can start to learn about, our emphasis on planning, and investing and planning. But then you simply just click on the contact and, just like on any website, and it'll come right to us. And we'll get the email. We'll reach out to you. You can always call our office, 517-783-1695. Always, we're always available, and you'll get a person. And if you don't, that's rare. That just means we're all on the phone. But generally, you're going to get a person. And we'll be happy to set up some time to talk. But I think the big emphasis on this is just understand that this is a relationship, and really you shouldn't be that hesitant to go talk to somebody. It might not be the right time to maybe begin working with an advisor or certified financial planner. That's okay. You could still probably get some really good tips on, what you're doing, and maybe some things you can do to speed up your process of getting to that financial independence. Because that's really what we all want to do, right? I mean, at the end of the day.
No, at the end of the day, that's exactly where we're going to go. And I'm glad you added that because it's important that people understand the conversations are not obligations. And, like if you're a 20-something-year-old and you go in to sit down to talk to a financial advisor and you're thinking, I don't really have the money or anything, you might pick up some good tips. But I would also add, you would also pick up the idea that maybe it's okay to go talk to financial advisors.
Yeah. No, that's a great point, because a lot of our clients, they have just the people you're explaining, younger people kind of getting started. Right. We do it all the time. We have like a, half-hour conversation with them just so they can ask us, hey, I'm doing this. Is this good or is this bad? Just to give them some direction. Yeah. And that direction could make a huge difference on the trajectory of your planning. So good stuff.
That's great. It is really good stuff. And for those of you who are thinking, what was that phone number? Don't worry, that's in the show notes as well. So, if you're driving, you don't have to try and back up the podcast to write that number down or anything. It's right there for you when you get to a place where you can write it down. Easy stuff. For those of you who are listening to this podcast for the first time, subscribe. Then that's easy. Just hit the follow button. That way, every time Dan drops a new episode of Ramp Up to Retirement, you can be notified. You will be notified, as a matter of fact, and you can give it a listen. I would also ask that if you like it, review it. Tell people about it. That little thing we were talking about, referrals? We would appreciate you referring this podcast to other folks, because word of mouth promotion is really great in a really trusted way in terms of promoting a podcast or a product for that matter. Until next time, I'm Bill Tucker. I want to thank you for taking the time to listen today. On behalf of Dan Reese and everybody at Avery Wealth Management, thank you. And we will remind you that you can go out today and make today a great day or not. It's your choice. Use it well. Thank you. Until next time. Thank you for listening to Ramp Up Your Retirement. Click the follow button to be notified when new episodes become available. Visit our website at www.averywealth.com or give us a call at 517-783-1695. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Avery Wealth. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.